Hi guys, welcome back to my channel. Today, as the title of the video suggests, today I am going to discuss budgeting of revenue, that how in a corporate world, in a practical life, how we are doing the budget for revenue part. So before I move on to the slides, I just want to give you some brief introduction about the budgeting of revenue. In corporate world, we have contract agreements like client agreements, client confirmation. So there is some legal agreement in which the terms of how the billing structure will go, how they do the payments, and what kind of services we are going to provide them. So that kind of stuff is mentioned, and we are getting revenue and income on that, or whatever material we are going to sell the customer. So we are getting revenue on that part. So we have contract for like 1 year, 2 year, 3 year, depends on contract to contract and customer to customer. So we have the projections here, are going to provide this service and we will get some revenue, and we can do the monthly projections and that again in yearly projections. So that kind of revenue budgeting we are doing in a corporate world. So let's start the video. Hope it will make you more easy and more comfortable to understand the topic. And still I would say, if you have seen my earlier video, last video, it will be a bit easy for you to understand some terms, some terminology that I'm going to use in my video. So if you have not seen yet, the link is in a description. Kindly go through that video. That will be make you more easy to understand this video. And again I'll say, if you have not subscribed the channel, please do subscribe the channel, like the video and share it with your friends, those who are interested to know about the FP&A profile. So I'm not taking much time, let's start the slides. So guys, as I give you some brief introduction about the budgeting of revenue, like in a layman language, what the actual meaning is. So if I'll say about the corporate world, like in a if I'm going to do the budgeting of revenue for a particular organization, so first of all I have to analyze the business that the organization is doing. It could be a service provider or manufacturing concern or a trading concern. So we have to do the estimation or projection for a service revenue part, or selling of goods, like whatever material we are selling to the customers. So that could be more defined as per the contract and terms which is agreed with the client. So types of revenue as per contract terms can be classified in three major categories. First one is the service or sales revenue. So if an organization is a service provider, so we can estimate that what services we are going to provide to the customers in upcoming months or in yearly basis. So we can estimate our service revenue as per the agreed terms with the client, and we can do the projection revenue accordingly. And if we are selling some kind of material or goods to the customers and the price are also agreed as per terms of contract, so we can do the projection of revenue for sales revenue as well. And there are some time it happens in service providing organization, they provide some services within the organization to internal department or to intercompany. So we can estimate the revenue as per internal agreements with the departments. And the second one is the ad hoc or project revenue. As the name suggests, ad hoc means there is some ad hoc work which is not agreed in the master agreement and which cannot be recognized in first part. So we are doing some kind of short agreements with the client, like this is the additional services or additional material we are going to sell you. So we can do the projection of that revenue in second part, in ad hoc project or CR revenue. CR here means change request, means whatever changes we are going to do for a shorter period. So the third one is the recharge or pass-through revenue. It can be also classified as a reimbursement expenses. So sometimes it happens we have to visit the client's premises for quarterly based review or some other stuff. So whatever traveling expenses and for hotel expenses for our stay we incurred just because of client's requirement. So if it is agreed in the agreement, if it is agreed in the contract with the client, so we are, whatever expenses we incurred, we just charge it back to the client and we get the revenue. So this is basically depends on the expenses if we have incurred, and if it is agreed with the customer, so only then we can recharge it back. So service, sales, internal revenue can be further categorized in three parts. The first one is FT based revenue structure, second one is volume based revenue, and the third one is time and material. So if you have watched my last video, so you would have some background on it already. So no worries, let me start with the first one, FT based structure. So in that kind of revenue structure, we have agreed with the client that how many resources will be working for client, and we will charge the rate as per the agreed in the contract. So we will simply multiply the per month FT rate with the agreed dedicated employees that going to work for the client, and we will allocate it to the end of the contract, and we will do the budgeting of revenue accordingly. So sometimes it happens we have some capping, like only clients say only 1000 to 1200 employees should work for me, and if there is employees working less than 1000, or if there are employees working more than 1200, so rate could be different. That depends on the client agreement only. So that's why ARC and RRC terms can be clause can be applied. So ARC here means additional resource count. So the example that I provided, if employee is working more than 1200, so in ARC terms rates for the additional resources can be different. And if reduced resource count is there, like if the FTs are less than 1000, so the count and for the rates of the reduced resources could be different. So that is purely based on the client agreement and whatever agreed with the client. So we have to estimate the budget, like we have to estimate the revenue. So FT here means full-time equivalent. And the next part is volume-based revenue structure. In this kind of business, we have some volume work, and that can be further classified as a verification work or some kind of KYC work. So we agreed the rate of each task with the client, and we will multiply it with the expected volume that could be happen in the upcoming months or in the yearly basis. So we just multiplied the rate with the expected volume for each month, and we will do the budgeting of revenue accordingly. So if I'll give a further example to explain it more, let's say if there is a client from the educational background and they ask us to do the form verification of students, like whatever form students will fill, and we have to do some kind of verification for them. So we will charge the revenue as per each form. So for each form we will do the verification, then we will multiply with the rate agreed with the client, and we will charge them with that part. So that is classified in volume based revenue. The third one is time and material revenue structure. This type of structure follows where client doesn't need any regular work from us. So they have agreed the hourly rate, and whatever our resources spend time for the client's work, so we just multiply it with the hourly rate and we just charge them back. So if I'll say about the budgeting of revenue, so we just estimate the hours that our resources going to spend on client's work. So we just multiplied with the hourly rate, and we just do the estimation and do the projections of revenue for monthly and yearly basis. So this is purely depends on the client demand and the requirement that they need the services from us. And sometimes it happens for providing this kind of work we have to spend some material as well. So if I'll give an example, if we are providing any IT support to the client, so it happens sometimes we have to install some kind of hardware for them. So we have agreed the prices for that material, so we charge the material amount as per the terms of contract. And if we are selling goods, so that could be also classified in material part. So we just multiplied the price and the material or the goods we have sold to the customer, so we charge it accordingly. So this is the third and the last one for the service sales or internal revenue part. Adhoc project and CR revenue, as I explained earlier, this is type of work which is not agreed in the master agreement. So sometimes it happens client come back to us and ask for some further services or for some further sale of material. So we don't do the changes in the master agreement every time. So we just make a ad hoc project revenue structure where we do the confirmations on mail, or we just make the new change request forms where we mention the new services or the goods we are going to sell or to provide the customer and the agreed price with them. So we just do the budgeting in that ad hoc project or CR revenue, because these are for the short term period, and we can just estimate our revenues in a separate form for those projects. So we are not merging it with the service sales or internal revenue. So this is separate from them. So that's why it's known as ad hoc project or CR revenue. The last one is recharge or pass-through revenue. So it purely depends on the client requirement. If there are some expenses that we are spending on behalf of our client, so we just recharge or pass through them back. So we just do the budgeting as per the requirement. We know that on the quarterly or on a half yearly we are spending such kind of expenses which is related to client, and client has agreed that they will recharge us back. So as I give you an example earlier, like quarterly based review, we are spending some expenses for the client visit, or we are just spending some expenses on the traveling. That's purely because client is asking to do that. So we just estimate the actual expenses and we just recharge them back. So that can be on the quarterly or a half yearly basis. So we can just do the estimation for budgeting of revenue. So this type of revenue is purely on the reimbursement type. So this is depends on the actual expenses that we are going to spend. So this is all for the budgeting of revenue. So hope guys now you have some better understanding about the budgeting of revenue, how it works in the corporate world. I know it's a very wide concept and each and everything I can't just cover in a short video. So I would say if you have any query, you can ask me in the comment section, or if you want to directly reach me out, you can just ping me on my Instagram ID showing on the screen. So please, if you have watched this video till now, please subscribe the channel and please share the video with your friends, those who are looking to get some knowledge about FP&A. And if you want me to make some more videos, please mention it in the comment section. And if you want me to cover any particular concept, please mention that. And do like the video, subscribe the channel. So I'll meet you again with the new video. Till then, bye bye, take care.